Thank you very much, Kevin. Back at you. So I'm going to be talking about crude oil today to start it off, but to begin with, this is what I'll be thinking about Monday on Christmas. Face will not be open. So everybody, I'll have a blue Christmas without you. I'll be so blue thinking about you. You'll be doing all right with your Christmas of white, but I'll have a blue, 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 blue Christmas. Merry Christmas, everybody. To my trading warrior, brother and sisters. Okay, so now to the market. So we know there's not much going on. Dollar's rebounding here, right? Have you guys noticed how much more detailed my charts have become? Look at that. Look at all those lines. Look at all those fibs and channels and head and shoulders and throwovers. Have you ever seen my charts this detailed? Give me a Y if you have. Ziggy, you've been following me around for 5 years. Windsor, you too. Okay. You know why? Because these are the excellent charts of Mr. Steve Volpe. Okay, so I used these yesterday with during an interview with Larry Pesavento on TFNN, and I agree with the things that Steve has been pointing out. Technically, I still believe that there's destiny for $62 in the crude oil market. I'll give you the reason why in a minute. Basically, it's a weekly target that's been there for a while, but we have it here in this little triangle. Sometimes you get terminal thrusts out of triangles, and Steve has a 1.618 at 6298. So I just want to show you why there's some confluence there. Because when I look at my weekly oil chart, all the way back here toward in the spring of 15 to 16, we had a falling wedge. Everyone see that? Yeah, they're Mr. Discipline signs. Okay, so what's the rule that I was taught and I've shared with you guys many times on wedges? What kind of retracement you look for fib-wise? 38, 50, 61.8, 78.6, 88.2, 100%. Okay, because wedges can retrace 100% of the move. Coincidentally, the high of the move where I have it anchored on this day is 61.54. The high up here was 62.5, and you go back to Steve's chart here, and that's where the fib comes in, a little bit higher. But so there's some confluence up there. So when I go back to the crude oil, it's very possible, you know, when you look at this and do a total retracement of it, although it's threatening the 200 week, that from up here we could get a pretty good break. I mean, as Steve would say, look how fast it took to get down here, and look how this has been a grinding. Will it turn into a bull market? It could, but I think that we could get a major retracement in the energy, and let's just ballpark it, call it 25 to 60. That could take you 17 lower from 60, could get you back down to 43, 42, because I am expecting some deflationary moves in the first quarter of 2018. The catalyst, I believe, eventually is going to be a stronger dollar, but I'm looking for weakness first to take us under the 91. Here's another chart that Steve provided for me. Here's our bailiwick. So right now the dollar's trying to recover, but yesterday the euro threatened to break out, actually broke out a little bit. But the pound, if we take out 33, is going to go to 31.5, and maybe get a pullback in euro back to, I think Blake was saying 116 before he left. If that happens, we're going to have a C wave or a 1, 2, 3 up here for a failure. I'm not that, I'm neutral. I would love to see that, because I eventually believe there's destiny in the dollar index to take out this low, as Steve pointed out. This was pretty directional. We had about 8 months down during 2017, and we really haven't even retraced 38% of it. That would be up here around 95, 90, 96. So pretty weak retracement so far. And I think what's going to happen, and it is a valid argument, we have record net long positions in euro, and yet they can't crack it, at least not yet. So just imagine if it's a crowded trade, the euro right here, how crowded is it going to be if the dollar index flushes to new lows? Every dollar bull will be gone. A lot of them are already gone once we negated this little head and shoulders pattern at 94.20-ish, 94.30. So your first signal that we're going to start heading up maybe towards 96, Stella also mentioned that, would be action back over 94.20. Okay, so that's a number to watch. Getting back to the individual pairs here, here's a picture on the pound. EG is still working, guys, so I mean that's been my best forecast for quite some time. It's having another good up week. All right, so we were right from this weekly reversal in here, and EG still, to me, looks like it has a pretty good chance of fulfilling the wedge objective here too, which would take it up to 89.80, I believe. Here it is. Here's the wedge line up here. So even though there's a little heaviness here in the euro and pound, it's not convincing enough for me that we're just going to roll over. We may just go quiet for the rest of the year, kind of have an EKG of someone in a coma. So, but this is definitely a line in the sand in euro, in the pound here, 130, 133. So if we take this out, we're going to 31, 31.5. Starting to look like a descending triangle, but I still favor the short side of the dollar, the long side of, as long as euro pound looks good to me. I have a hard time wanting to fight dollar weakness. Okay, so I'm looking for more dollar weakness. We could still squeeze the shorts here. You see we got through this blue line yesterday and we're testing it here. So I could see how some bears are saying, okay, maybe this was A and this is ABC and we're getting a B here and we're going to get something like this from here, which could take us down to 16 or so. 17 is going to be, I think the euro is going to be in trouble. So I still favor getting it over with and heading up towards 21.5 or so. Extreme case, maybe 23.5 in euro. And then you won't find a dollar bull anywhere on the street or the cosmos. And that's when I believe the dollar will be a much better and contrarian buying opportunity, which is down here, cleaning out the last bulls at about 88.5, which is really 61.8 of this whole move that we had up, peaking at 104. So this was impulsive. This is sloppy. It's been hard, except for this trend here for about 4 or 5 months. Now we're choppy again. Even when you look at this, there is a possibility that if we get down here and then you start drawing lines up here that Steve is starting, you could have a falling wedge there. Okay, so that's my view. Want to again welcome everybody from investing.com. I lined up a special guest. I'm bringing in, yeah, that's a Dixie. Yeah. So I brought in a special guest. Adam Button's going to be here from Forex Live. wanted to make sure maybe I could get some of Adam's look ahead into January, some seasonal stuff. So stick around for that. Don't forget to subscribe and invest in your trading performance future here with us at ForexAnalytix. So, Mr. Steve Volge, thank you for letting me impersonate you with your charts on TFNN and this morning here in FACE. Are you here, buddy?
Hey, Dale. Yes, I'm absolutely here. Sorry.
Okay. All right. You never know when I'm calling your name, so.
I misclicked and I didn't actually unmute myself initially. How have you been?
Good. Well, you know, it's exhausting being you and being so disciplined. So being you for a day as a technician, I'm going to retire from that now and go back to, you know, my Forrest Gump methods. But thank you very much. They really liked your technical, the picture that you drew in the different instruments I talked about on TFNN yesterday.
Yeah, don't even mention it, of course.
So, you know, I mean, remember that video talking heads, same as it ever was? Today, again, looking like that. Although yesterday the Euro did have a burst and looked like it was trying to break out. I want to see your updated work now.
Yes, definitely we'll have a look at it. Unfortunately, there is something little wrong with my internet, and obviously I can't restart at the moment. So let me know if I start lagging, because I would probably need to restart my router, but that's not an option now.
All right.
Let me take the screen. I guess one way or another we're gonna make it. By the way, Greg is going to be with us, and he's going to be rather soon. Yeah, he's going to be like in around 10-15 minutes. He's going to be with us.
Okay.
So we are also going to have you know, an outlook on from an Elliott wave perspective. Greg hasn't been with us for a week now or whatever, so I'm pretty sure that he has some new counts he wants to share with us, and we can have together, you know, a look at the longer picture.
Yeah, a lot of technical pearls from Greg every time he's here.
Absolutely, and always a great longer-term outlook as well.
Yeah, which is what we need this time of the year, right? Because you know, short-term stuff right here is, you know, you're just fodder for the algos, I think.
Yes, exactly, and you know, we might see some you know, wild moves during this period, but that doesn't mean that we're going to see any follow through, because we very well know that you know, during Christmas time and between Christmas and the New Year's, liquidity is extremely thin. And yesterday, for example, we had once again very quiet markets, and at some point, you know, for an hour we had effects that started moving. And then after an hour of some movement, it died down again. So yesterday we actually got the threat of some breakouts, but the vast majority of them didn't end up transpiring. The Euro is one of them. But let me start from crude oil, since you know,
it's right there. It's right there too.
Yeah, I mean, crude today, earlier in the day, tested the triangle's resistance. For the time being, it seems to be getting rejected once again from that resistance line. But you know, nothing has changed with our outlook. I mean, as long as we are consolidating near the highs, I believe that the chances of a break higher towards the 63 area, where we have the 161.8% extension of this move lower, is a quite high possibility. So that's what I'm looking for the next move in crude. I'm pretty sure that as an Elliottian, Greg is of the same opinion here. Now, yesterday we got a threat. We actually intraday broke above this resistance zone that we've marked here, but we did not close above it. You know, it's once again seeing how a daily candle closes always proves to be, the prudent way to approach a market. That doesn't change.
It's an FT. A lot of FTs out there. Forex teases. A lot of Forex.
Yeah, indeed. That doesn't change the fact, though, that as long as we remain above the 117 area, probably a break to the upside is somewhat more likely than a break to the downside. So, as long as we're currently testing this resistance zone, if we break it just above it, we have this descending trend line. I really think that, any move above there, if confirmed, is going to push the Euro USD above 121, which was the September high. So, coming here in this consolidation from a 9-month strong uptrend move, obviously, sets the tone and, shows the direction for which side we should expect a breakout to happen, most likely than not. So, but that breakout did not get confirmed. Now, what is finally trying to also break out, and theoretically speaking, yesterday it barely didn't happen, is the Euro Yen. After 3+ months of consolidation within this range, yesterday we closed right at the top of this range. Today, at some point, we were trading above it. Now we've come back to the upper band of this breakout area. And I'm looking forward to seeing how today is going to close, because if we drop back below it, then it's a non-event. Now, if we push higher and we close above it, it's a different conversation we can be having. Of course, I'm not very inclined to believe this breakout, during holiday season, but it's definitely something to note, since 3+ months of tight consolidation is not something you see every day. And as I was explaining yesterday, I'm more likely to believe a break to the upside, since we came, after a strong move higher, we came into this consolidation. So a resumption to the direction of the trend that we had before is, a decent possibility. So that's another pair to note that moved yesterday. Now, other than that, the USD Yen has been showing some signs of life, but as we've said, plenty of times, as long as we remain below this blue trend line that you see here, there is not much to do, but wait and be a little bit more patient, because obviously a breakout from this blue trend line is going to be a breakout out of a line that has been holding price action since the summer of 2015 that the USD Yen actually picked. So this is a very important line for the market, and that's how we're going to treat it. But as long as we remain below it, and since we're quite close to it, establishing long positions, most likely than not a good idea, right? So you either want to be short close to it, or you can give it a little bit of a leeway, because we also have this 61.8, which passes from 114.30, which is also the recent highs that we had. So let's call it 80 pips to the upside. So that's more or less what you're risking. And if we actually get rejected from here, there's a good chance we can come back to the 111 area. So I'm flat at the moment. I'm not looking to even get involved with this. It's too choppy for my taste, but I'm just giving you the facts. Okay, DXY. A friend of ours is asking for the DXY, which, the DXY hasn't done much. It still holds in this range, which is the support area, which extends, let's call it, from 92.60 to 93.10. And on the other hand, we have the 94.20 resistance, which has proved, its importance multiple times. So establishing DXY positions between these two areas, it's like gambling for my taste. I either want to see a break lower, in which case I'm going to be inclined to believe that this was a corrective move higher to this 9-month trend that we had from the beginning of the year to September, when we found a low at the first days of September, and then we will be looking for a push to new lows. Otherwise, if we break above 94.20, then I can easily see the rebound extending higher, perhaps towards the 96 area. We can find the 38.2% fee, but 95.90, or even a little bit higher. But unless we clear 94.20 to the upside, there is not much of a reason for somebody to be bullish the DXY.
It's a coin toss.
Not exactly. If I had to bet, I would say that it's going to be.
Where do you get confirmation for a continuation move to the downside?
At a close below 92.60.
Okay, yesterday? Oh, those lows down there, I see. Okay.
Yeah, here.
Okay.
This is also, by the way, if you see, it's not only the lows down here, it's also the 61.8 of the move we got from the lows to the highs just above 95.
Yeah,
so that's a confluence. Yeah.
So that's a confluence of support. 90 if you just did an arithmetic count.
Sorry, didn't hear you well?
It would go to 90 on a breakdown there, because it's about 250 points.
Then we can zoom out and have a look. I think that a very good zone to be looking for the next support area is most likely than not the 88.40, because it's the 61.8 of the bullish move that we got from 2014 to the highs. So 88.40, quite a good level to be looking for once we get a confirmed continuation to the downside. Okay, but obviously, as I said, we first need to see a break below 92.60 to increase our conviction that that's the proper side of the market to be looking for. Okay, so what else? Yeah, cable has been acting in a very predictable way. It's still yesterday it was threatening at some point. At the same time, actually twice yesterday, the cable threatened the break above this bull flag. Once it was in the afternoon when the euro was making its move. The other time was earlier in the day. But once again, seeing how a daily candle closes is quite important, because it ended up closing as a shooting star, which verified one more rejection from the trend line resistance. Today we're also grinding a little bit lower, so still no real event here. I mean, we remain in a slow descent within a channeled correction. So as long as it doesn't take much more, because the more it gets prolonged, the higher the chances that something else is going to play out here. I would favor the next move to be to the upside. Okay, but I would really want to see, to get some confirmation for that, I would want to see a break above 134.60. I can hear that Grega is with us. So Grega, what do you think about the cable?
I'll just close your charts. That would be my answer, because I really don't like cable activity at all for the last 2 months almost.
Yeah, it's too choppy, isn't it?
Yes, it's too choppy. It's not really directional. I think that if you want to trade pound, I think that there are much better chances on some crosses, because there's definitely.
No, I'm totally with you. But as you know, it's the nature of the profession. A lot of people, since the cable is one of the most yeah.
Yes.
A lot of.
And as a trader, it's probably very important to know that when some market is not moving, just move forward and try to look for opportunities on some other market, because it's very important to know when to stay aside and when to be involved. So that's probably a lot of newbies that are lacking of this part, because there are a lot of traders want to be involved in particular maybe in Eurodollar and will try to trade Eurodollar every day. And in my opinion, it's very important in price action like this that you are trying to look and search for opportunities, especially if you are an intraday trader, on markets that are more that are tradable, that are more directional clear. So
great mentoring, Greg.
Thanks, hey Dale. So actually, but technically speaking, pound, I still think that sooner or later we will see a move to the downside. But I was expecting your red trend line that I'm looking at connected from March lows, I think. March lows, yes, I think that this trend line sooner or later will give way, and I'm just waiting on this trend line to be broken before this pair could come on my radar list. So until then, I'm just tracking two different possibilities regarding wave counts.
Okay, I'm making you the presenter, Greg, so you could show your stuff. There you go, buddy.
I'm giving you the screen, yeah. So you can show us exactly what you're looking for, and you know I can always have discussions with you as we usually do. But by the way, having to do with the cable, since we were talking about it, the recent price action though definitely doesn't look impulsive to me. So if I had to really bet for some reason, I would expect that the cable should make the next move to the upside. I mean, in the short term now.
In the short term, yes, I agree. In the short term, I think that we could see push higher, because as you said yourself in this channel that you had down on your chart, this bearish channel looks very like a small flag. So yes, I think that we could see a break to the upside, and also if correlation with Eurodollar will stay on the same track, I also still think that Eurodollar will see break to a new high, and this could potentially mean that the dollar overall will be weak and pound could benefit. But pound overall speaking is also weak, so who knows. Regarding the wave counts, I'm still looking at this as a wave 4, and we are testing this important lows from start of the year, from start of 2009. It was 1st of January. So actually we are now also at this trend line. I think it's very important key level, do or die level, and I think that there's still, despite some pushes above this trend line, there is no decisive breakout. Okay, for decisive and more important or significant change in trend, you definitely need to see something more aggressive on the buy side, but definitely that was not the case here. So I still see this as a wave 4, and I'm expecting a reversal lower. But as I said, because pound is sideways, I'm tracking two different wave counts. Now the first wave count here on the left is actually that we completed wave 4 here on September 20th, but despite nice fall down to October lows, recovery is somehow slow, but we don't have enough confirmation to say that this wave 2 is finished, because as you said yourself, Steve, we are moving very slowly here. So to say that wave 2 is finished here, I think would be definitely too early. So that's why I'm tracking this wave count on the right as well. It's wave 4 a little bit more complex, and somehow I like this wave count, especially when it comes to Eurodollar, as I said, where I also expect a new push higher, maybe a top formation in January, February on Eurodollar, which could match up pretty well with cable as well. So I'm looking at this trend line very carefully. It was the same as your trend line, I believe. So once we see a break below that trend line, ideally next year, I think that will be first evidences that pound could come under pressure. Okay, but until this trend line holds, I'm just tracking two wave counts, and I will have no issues even if we see this push above 1.3650, because I still think that then upside could be limited maybe around 1.4 psychological level. Are you still there?
Perfect. Yes, absolutely, absolutely. I'm here. What are you seeing?
Steve, we have numbers in about 2 seconds.
Yeah, that's very true.
USD slightly weak, 0.1 lower. Jobless claims weaker, all a little bit weaker actually.
We have a little bit hotter CPI from Canada though, 2.1 versus 2 expected.
True.
Eurodollar found some support here, as I see on GDP report.
Okay, so yeah, it was a slight miss. I mean, the third quarter GDP, it's just a slight miss. So nothing really to write home about here. Let's see how everything is reacting. The Euro USD is picking up. Euro USD is picking up just a little bit. The USD Yen is weakening just a little. Nothing to write home about. Not a big reaction.
You already are home. You're home. Why do you have to write home? You should just talk to people.
But by the way, since I'm seeing it in front of me, Grega,
Yes.
I think that the recent price action, the last few days of price actions for the Aussie and the Kiwi are purely consolidative before another leg higher. I mean, in my view, these two pairs especially, if I had to pick two pairs that in the short term I have high conviction of what they're going to do, I think the last few days that would be the Aussie and the Kiwi, and I think that they should have at least one more leg higher. What do you think about them?
Yes, if we take a look on Aussie dollar, I also think we are in a small consolidation before we go into the upside. I see prices now probably in a wave B. In fact, I'm interested to look for a long idea here. I would like to buy it, but at this stage, as you can see, price action was very limited in smaller range, and for trading, definitely want to see deeper pullback, at least 38.2%, if not more. So for now,
why do you think it's going to pull back, and it's not just going to be like a triangle that's going to straight break higher, even from here immediately?
From here, because this first reaction to the downside, as you can see, first leg here
was a five wave one, huh?
It was very impulsive. So that's why I think that
the triangle is a B. Yeah, the triangle is a B, so you need a C. Yeah.
Or maybe it's not a triangle, your wave B. Okay, it can be just a simple wave B, A, B, C. But in either case, I think that there is a chance that we will see a deeper pullback. And also, I'm just waiting on this reaction. Maybe it will happen, maybe it will not. Who knows? But if we see lower pullbacks, definitely then I could be interested to look for potential long opportunity here to catch wave C to the upside. Okay. If we take a look here on a bigger time frame, on the daily chart, I think that we can be here in a wave 4, but maybe also this is wave 2. Okay, but in either case, it's a corrective rally. So I think that sooner or later, once we see a new push higher into wave C, there could be a reversal to the downside coming, and again, ideally in January. Okay, so I think that dollar could come very strong, could occur very strong in the next year based on the charts I see. I also see dollar index. If we take a look on that one, I see dollar index in triangle here for a wave 4, expecting a 5th wave down, and then reversal to the upside. Okay, and we know
same targets that we same targets that you have, Steve.
It's around 90.
Okay.
Oh yeah, I was looking for 80. I was looking for 88.40 because it's the 61.8 of the whole bullish move from the 2014 lows to the high. So 88.40, I think it's a great area.
88.40. Look at this. Actually, what I'm looking at is this 261.8% extension of wave 1 measured from end of wave 2, and normally that's fib level that you would tracking where a whole 5-wave cycle could come to an end. But obviously that's just minimum target, so definitely we could see a push below that level and then turn to the upside. But
Greg, is after we complete down here and you have it labeled as C and 4, does that imply a new high over 104?
It's a little bit tricky question, but the fact is that yes, I'm expecting a bounce. Now, there are different wave counts possible. Maybe this is the top, and this 5-wave decline that I have labeled here, okay, is already started of a new trend.
Okay, so that could be 1, and we could get a 2. We could get
and exactly, and this pullback still should be
by the way, Greg, I'm from a fundamental perspective as well. I'm a proponent of that theory that we're not going to see a new high. I don't believe we're going to see a new high in the dollar.
Okay, I love that. Because if a lot of people don't believe it, it may happen.
Yeah,
okay.
Really, a lot of people don't, Greg. Just look at the net long positions in euro. So a lot of people don't.
Yes, but even if we see just a bounce, a 3-wave bounce, keep in mind that second waves can pull back for 61.8%, sometimes even more. Okay, so you could easily go much higher. So, and then again, sentiment will try again turn to a bullish side. So even if you think that top is in place, or even if you think that we are still going to see a new high, in either case, there should be a 3-wave recovery once we get a new 5th wave down.
It's still a great swing trade from whether it's 89, 88, 90 up to 97.
Exactly. And for myself, I will be tracking a 5-wave rally from the lows. And once we get it, I will not care if this is wave 1 or wave 8. There will be a chance to catch some upside for a third leg of recovery. Okay. So it's actually trading. It's actually a probability versus possibilities. Okay. So I think that in either case, there is a good probability that we will see at least 3-wave recovery in 2020.
Greg, by the way, since we also had some Canadian news with the CPI coming, as I said before, just a little bit hotter than expected, which is obviously something that's been helping the CAD. I don't know if you had a look at it the past few minutes. It's pushing lower again. Personally, I've marked this on my charts as a range because, as you see, we are actually trapped in a range here. I mean, we got rejected from the upper band of the range yesterday, and now we're pushing once again towards the lower parts of this range. What do you think about it? What do you think the next move is here? I was actually hoping and expecting for one last push to the upside, perhaps to test the 61.8 before lower, but now we're moving away from the resistance once again. So I don't know. What's your view?
I think that this is still a wave B, but just going more complex. We are going into holidays season, so I think I would not be surprised if this consolidation will just be a little bit more complex and longer in time, but still think it's a wave B, and that sooner or later we will see a push to a new high for this wave C towards 61.8%, as you said, or maybe even higher. Okay, so if I take a look based on current development, if I take a look on the 4-hour chart, it looks like that this could be a flat. Okay, so I will label this one.
By the way, as long as you're doing the labeling, there is a friend here asking, dear seniors, this is really interesting session, and you forgive me extra knowledge and skills. I would like this session to be sent to my mail as it's being recorded, etc., etc. Thank you for your kind words, first of all. And second of all, every single webinar that we do is being recorded, edited, and posted on our YouTube channel. So you can view it as many times as you like by searching for ForexAnalytix on YouTube, and you'll find the ForexAnalytix channel, and all the webinars are posted there a few hours, usually a couple of hours, 3 hours maximum after the webinar is over. It's going to be posted there. So you can even find all their webinars and interviews there. Okay, go ahead, Gregor. So what do you think? We're headed for a C before higher?
Yes, actually, it can be C or flat, okay, as a wave C and a flat, or it can be still a triangle if we go, if we would slow down here, because we have first two legs, okay, in three waves. This was a three wave decline, this was a three wave rise, and always when you have first two legs in three waves, there are two possible counts: flat if you see a sharp decline, a sharp turn for a wave C, or a triangle if price action remains trapped in this contracting range. So at this stage, both counts are possible, but your report is that both are corrective counts and none of it is done yet. So I think we should wait for more price data and see which type of correction.
Obviously, the biggest pain for participants is going to come if the interpretation is the flat one, because that means that we might temporarily break below the range's bottom. That's probably going to get a lot of people trapped to be, establishing fresh short positions, and then it's going to just make a roundabout in their face, right?
Yes, exactly, and a lot of stops will probably be cleared here. A lot of new orders will be activated, and that's would be perfect time for a new turn, so that everyone would be kicked out of.
On the other hand, I mean, I wrote that yesterday in the end of day analysis as well. We are seeing finally a break above what looked like to be probably a zigzag in a descending channel in the CAD yen. What is your view in CAD yen? I'm seeing here a breakout which tells me that it wants to go higher finally from here after a period of channeled correction lower.
Yes,
is that a zigzag?
Actually, I have a very similar view here. We are going higher after this quite overlapping pullback, as you can see from September highs. So either we are maybe in just an ABC recovery, okay, or maybe it's a new bull trend. But in either case, I think that there is room for more upside here, and I would be looking for move towards 100%. That's a minimum objective, but easily we could reach even higher levels. But here's this resistance of a wave X as well, around 100. So fib level. So I think that watch out for potential limited upside here.
So you also like it to the upside, huh?
Around, and also it's 90 level, very strong psychological level. So I would not be surprised if it slows down up there.
Yeah, but obviously, if the interpretation that perhaps a new high is going to come from here, that would require the USD Yen to also play ball to the upside, not only for the CAD to keep strengthening for a period of time, yes, which from what you showed in the USD CAD view, you don't expect the CAD to strengthen for much longer against the USD before one more bout of weakness. For the CAD, I mean.
Yes, but CAD yen can also stay sideways. It may not move much.
Yeah, so you mean the vast majority of the move then to come from the CAD side, right?
Yes.
Okay. Speaking about that, what's your view on the USD yen? I know it's been extremely choppy. I haven't traded it in a long time. I'm monitoring the descending trend line resistance that passes from the 2015 highs, and yeah. If you draw a line from the, yeah.
If I draw this line, yes. I think that this trend line can be retested, and still wondering if we'll see a push to the downside, to the lower side of this range. But I'm definitely expecting a major breakout to happen in 2018. But if I think the dollar yen could have more connection to what will happen to Eurodollar. So in general, what will happen to dollar if dollar index will really complete that wave 5 around 90 and then turn to the upside, then we know the dollar yen could be much higher later in 2018. So I think that this is somehow of a triangle, but we are still chopping around. But I'm observing and waiting for potential breakout to the upside.
But from what I understand, not yet, right? You first expect some more weakness before actually break out higher.
It could be wave A, B, C. We are maybe now in a wave D, and then waiting for wave E.
Okay, so yeah, a triangle, yeah.
Yes, and we are definitely trapped in the range here, so not
quite clear. Do you believe that the last move lower for the triangle might also be coming along with some risk off in the stock markets?
As you know, I'm waiting, and I think that sooner or later this major pullback on stocks will occur. We can already see some nice weakness coming in on European shares, but still nothing serious on the US markets. But I think that there could be much lower levels for dollar yen if US stocks will finally turn to the downside. But they are still, as you know, they are at the highs, and DAX is much lower. So, but dollar yen is higher. So it looks like the dollar yen has more connection with the US stocks rather than trust DAX. But looking overall, I think that DAX is looking bearish. So I would be aware of potential limited upside in US stocks as well, even if we go just.
It's one of my positions is being short the DAX. One of the only two positions I've kept during the holidays is short DAX.
Actually, that was technically speaking. I think that that was very nice and good short opportunity this week. We have seen a gap on on Monday. And those gaps are very rarely staying open, okay? And we have seen a move up to 78.6%. The wave structure itself, it was definitely looking corrective, even already last week and the week before, because you can see that there was a lot of slow and choppy overlapping price action. So if you consider that price was higher at potential wave C resistance to complete wave B and gap was lower, there was a greater probability that this at least gap will be filled. But now we are already running below that trend line here. So I think there is good potential for much lower levels.
My target since.
Does that imply a higher euro, Grega?
Yes, I think that Eurodollar during this time, of course, could break to the upside out of a triangle. Yeah. Okay, but definitely not to move to straight line. I think that we should be aware of some correction, because if you take a look on a 1 hour chart, I think that we already maybe completed this 5-wave drop, and we will now stay consolidating here.
My target since the beginning was 12,500 for the DAX. It's a 61.8 fib there. So you know that's where I'm targeting, Gregor.
How much? What is the price?
12,500. That's my target.
Okay, that's here, around there.
Yeah.
Yeah. Okay, makes sense. Also, it has. We used your fibs.
It's also 61.8 fib.
Okay, but I'm just wondering where is equality level.
You're seeing it as an extension. Yeah.
Equality level at 12,650. Okay, then definitely. For minimum expectations, you should expect a break of these lows.
Yeah, you know how it is. I mean, I have a target in mind. Obviously, I'm monitoring price action. I'm going to adapt according to what the price action tells me. Yes. We have a friend asking, and I know it's one of the most popular questions the last few days. And you mentioned indirectly before that some of the pound crosses are more interesting, and we have a friend Jason asking for pound Aussie and pound Kiwi.
Pound Aussie. Okay. Pound Aussie here on a daily chart, it made an overlapping recovery from 2016 lows. We have retraced exactly for 38.2% against these previous 5 waves of decline. Also, market found resistance here at the wave 4 of one lesser degree, and so we fell down from that very important levels, and looks like this decline here is looking impulsive. Okay, So here's this 4-hour chart. Also, the wave structure on the 4-hour chart shows 5 subwaves up within wave C, which is missing here. Okay, so this on the right, okay, this leg is actually this leg, and it shows a completed subwaves, all needed subwaves. So I'm not really surprised by this turn, and from a trading perspective, I think that could be very interesting to look for more weakness after a bounce.
Yeah, you know something, Greg, both the pound Aussie and pound Kiwi, they were following very nice upward trending channels. And you know, initially when we started moving lower, you know, I said that you know, I'm going to treat any correction lower as a corrective move initially, but I was also looking at it yesterday when I was doing analysis, and it was obvious to me yesterday that the recent consolidations are probably wave 4s, and I saw what exactly that you're saying, that the moves lower actually do not have a structure that looks corrective anymore, but it looks likely more impulsive, which means that at the very worst case scenario, after seeing some strength, I'm expecting some weakness as well. That's why I started a couple of days ago, I started mentioning in my analysis as well which resistances people should be looking for, because I'm not convinced that if we're going to new highs, it's going to be from here. It's probably going to be from lower, right?
Yes, much lower. Definitely, you should watch at least for a 3-wave setback, and then we see what type of structure actually a market will form. But for now, I think that there is a chance, as I said, maybe to short this market. We also have seen this nice broken trend line here connected from September, so maybe retest of this trend line could be a really nice setup.
Indeed, indeed. What about the pound Kiwi?
Pound Kiwi actually very similar here, as I can see on a daily chart from start of summer 2017. We have completed 5 waves to the upside, so at least 3 waves lower should occur. Maybe ABC decline, maybe 1, 2, 3, and we go lower with the 5-wave movement. But in either case, again, broken trend line here, broken channel, which means from my point of view, the trend is turning bearish.
Yeah, exactly. That's what I'm seeing. What you're seeing there, and not only we broke below the ascending channel in the pound Kiwi, but we actually yesterday at the highs, we came back to retest it perfectly before getting rejected. And I think that especially the pound Kiwi has a very clean 4 waves already to the downside. I mean, you can cleanly see the 1, 2, 3, and I think that we're currently about to break from wave 4 and push once more lower to wave 5, right?
Yes, I can elaborate this. This was probably a leading diagonal here for wave 1, sharp wave 2, and 3. If you have a sharp wave 2, it can be complex wave 4. So I think this was a flat.
Yep.
And we are going lower now into wave 5-1.
Then a rebound that probably can come all the way back to somewhere like 190 to 50.
To that trend line, yes.
Yeah.
So you mean this bounce, and
yeah,
if anyone will watch it, then also should be aware that any corrective rally normally slows down at the area of a former wave 4. So this
wave 4, yeah.
Yes.
Yes, absolutely. Okay. What you already said that you're also waiting some more strength in the euro. So
yes,
you know,
to discuss about the Eurodollar as well,
yeah,
because there was some interesting developments. Just a second to see where is this 5th wave target on there.
You'll extend the wave 1, huh? Yeah.
Actually, it's 5th wave.
As you see, it's also coinciding very nicely with the low we had. Yeah, yes, there.
So definitely, this could prove to be a nice support.
Yeah, very nice area for a bounce, indeed.
Okay, so regarding Eurodollar, we discussed with Blake already last Monday, I think, that this could be a triangle. Back then, I highlighted gap technique. Okay, it was actually the same structure. Okay, and the same scenario actually, like this week compared to 2 weeks back. So back then, in middle of November, we have seen a three-wave rise, and it was a retracement back to this small gap that occurred on September 24th. I highlighted that during that day several times also on Twitter. And I said that market could slow down here because normally when gaps are filled, it will follow a new reversal. Why? Because there are a lot of orders unfilled in this area. So obviously, if they are filled, something is going to change. I'm not surprised to see this reversal happening. And now we had another gap, okay, that occurred on December 4th. So again, we have seen, and I said that probably because of that gap, there will be limited downside. Also, I came out with an idea that market is in a triangle, and I know that wave C should be made by 3 subwaves, and the downside will be limited if there is a triangle. So I was expecting a bounce back towards the gap. And again, we filled this gap, and I'm not really surprised to see another turn. So what I'm looking at now is potentially that we are going lower to see a final wave E, final part of this triangle, and then maybe break to a new high, I would say, in start of January, because that's when volatility will probably, again, come back into the market. So I expect that market will not just be a little bit slower, then maybe we start to see some moves to the upside after Christmas holidays, and then accelerating price action to new high, maybe at the start of January. Okay, so I think that for now, this upside could really be limited at the upper trend line and at this gap. Okay, it's, as I said, it's the same pattern like we have seen back in November. Okay, but once we see this, then,
very nice. So yeah, triangle interpretation. Why not? I mean, it looks likely. It looks likely,
especially because of. I think that key is when this triangle is unfolding. We are running into December, late December, so definitely I would not, and yourself as well, probably price action, as you know, could easily slow down. So.
Yes, you are right. But on the other hand, we have seen during these days some serious stop hands. If you remember a few years back when the euro during the holidays pushed over the 140 mark before it actually collapsed, at the start of the year. So, I wouldn't be surprised if we got like a strong move higher during illiquid days and hours. It wouldn't be the first time that has happened. By the way, we have a question exactly for you. Paul is asking, did Grega talk about the SPX yet? Sam Elliott forecasts calling for end of the grand super cycle in SPX around 3,200, maybe in 2020. There is a multi-year fib there, followed by end of the world-like correction. Curious if he has the same view.
I'm still bullish, and calling a top, it's definitely not in my task. I don't want to call tops. So I would rather say that we are probably going to see an extended fifth wave. We are still not seeing 5 subwaves within this red wave 4, that red wave 5 that are needed to complete this bullish trend. Okay, that is in play from 2016. So actually, stocks are still bullish, but I think there can be a correction coming in 2018, maybe at the start of the year. I would watch out these channels. If we see a break lower, I think that deeper correction could be in the cards. But still, start of 2018 could be just a small pause, but overall, stocks remains in uptrend from my point of view. I'm just waiting on a correction to happen. Okay, but when it will occur, it's really difficult to say because we don't have any impulsive sell-off to confirm at all.
Yeah, so listen, what seems weird to me, Greg, and I think you'll probably agree to that, is that our friend here is talking about 3,200 as a level,
Yes.
which is not so weird in my mind, because in essence, that's 1 year of bullish price action conservatively, because we are at 2.7K, even if we see somewhat of a correction lower. What troubles me more, and I find almost impossible, is not the 3,200 target, is the 2020 date. Even from a macro perspective, although 3,200 sounds, quite elevated, we are already at elevated levels, but bull markets are notorious for overshooting and going in mania phases, etc. What seems very weird to me is the date. 2020 seems to me too far away in the future. What do you think?
2020, I don't know if we go a little bit more complex here in the fourth wave. Okay, this is a monthly chart. We could stay in a fourth wave for 6 months.
Yeah, so the only way is probably then a very extended fourth wave of the fifth wave high, right?
Yeah, extended in time, yes. So it can be 6 months long, maybe even more. And then if we consider that fifth waves can sometimes be much slower than third waves, then even then, when we go higher for a fifth wave, it can take another year to unfold.
Yes, in theory, you're absolutely right. But I have another question for you. Does this kind of a market environment that we'll be going through look like to you that it's going to give us a slow last leg? Because it more or less gives me the impression that it's more likely to give us some kind of a blow off fifth wave than the opposite. I don't know what's your view on it.
I think that we are already in that blow off. Okay, but still in blow off, you will see some corrections. But they can be sharp, of course. But still, I think that there is already a blow off happening, and technically speaking, throw over and a blow off, it's usually confirmed once you have this Elliott wave channel broken. This is exactly what has happened in October of this year. Okay, so clearly we could see an extension much higher actually for wave 3 before we get a pullback for a wave 4. But the most important is probably trading, investing. So if anyone is looking for any chance to get in, I just think that it should wait on a correction.
Getting long exactly up here makes no sense, at least in the short term, makes absolutely no sense.
Yes, but
thank you, Grega.
You're welcome. You're welcome.
And have a Merry Christmas, buddy. And I can't wait. I can't wait to see your video, because besides being a great trader / Elliotician, you're a natural teacher. So I think that I'm going to be very interested in seeing the course that you're putting together for ForexAnalytix. So have a great holiday, buddy.
Thank you. Same to you.
Okay, Steve, thank you.
Thank you very much, Grega. Thank you very much, Dale. And we also have a webinar tomorrow, because we're saying Merry Christmas to people. Tomorrow is the last webinar pre-Christmas, of course. And then once again we'll see each other on Tuesday. So whoever doesn't show up tomorrow, have a nice Christmas and enjoy the interview, Dale. Thank you.
Thank you, Steve. Hello, Adam Button. Glad to have you with us to wrap up the year, getting close to wrapping up the year. Just made you the presenter, buddy. Waiting to hear you. Hi, Adam. How are you today, buddy? Happy holidays.
Yeah, hello, Dale. You got me there?
Yeah, happy holidays. Yeah, I can, Adam.
Hey.
Happy holidays to you, Adam.
See if I can get the webcam going there as well, and then see me at work. Yeah, good. Happy to see you, Dale. There we go.
All right.
I got. You see that? Good?
Yeah. Merry Christmas, Adam.
Same to you too. I got my shirt on today. Is all-time high.
And what's underneath it?
This is Nike.
All right.
All-time high.
Yeah. In what? Bitcoin or S&P?
Everything.
Are they going to cross each other?
I was just writing about a company called Long Island Iced Tea. This news was just crossing. So it's called Long Island Iced Tea. They make like ready-to-serve drinks in New Jersey. And they just changed their name to Long Blockchain Corporation. Shares up to $15 from $2.44 at the close yesterday.
Wow. So yeah, what was happening with .com? I don't know. You were probably, you know, still in high school in the late '90s, but you know, do you remember it? Anything with a .com after it?
Exactly. It
had an instant premium.
Exactly. If you're a CEO right now and you're not putting blockchain or crypto in your name, you're like, you're not even in the game. I don't even know what you're doing.
Yeah. Well, I'll tell you what, I'm interested in what you think, buddy. You know, we haven't had a major tax overhaul here in the U.S. since Ronald Reagan. And I know that you pay attention to fundamentals a lot. And, you know, it's not like it's having any immediate impact on markets. You know, maybe the markets, you know, anticipated it and ran into it. The equities did. Do you see any effects from this new legislation that's going to play out in any of the different asset markets that you and I pay attention to?
Well, Gary Cohn was talking yesterday saying, you know, it's not, or even Trump, I think, said it's not priced in yet. You know, people I talk to say it's not priced in yet. But to me, it's got to be priced in at this point. You know, some of the details might not be priced in, but I think the market might be a little bit more optimistic than it might be, except in certain sectors. So, I mean, we've been talking about this for over a year, so how could it not be baked in already? I mean, we're like I said, we're at all-time highs day after day, up 20+% this year. And, you know, I struggle to say that it's not old news at this point. So what happens next? I think it carries through into year end, and then I think January starts to be a much more interesting time. I mean, tech's still sizzling, obviously crypto is sizzling. But for, you know, some of these other companies, I don't know. And I think the accountants are looking at it closely too. They might start to find some huge loopholes in the tax provisions, and you might end up with a, you know, a gigantic hole in the deficit that nobody saw coming. And so these are some of the risks that are out there. And I still think risks are probably skewed to the upside for now, but, you know, maybe there's this sell the fact come early January. And I think there's a lot of people hanging on through year end on tax provisions so they can take the hit next year in a better tax code. So there's no sellers right now, bottom line. Right.
So there's that expression, as January goes, so goes the rest of the year, at least in equities. You know, that didn't happen last year or the year before. But I'm interested, since you do a lot of seasonal work, and you just said you're looking for some interesting price activity in January. What are you seeing in the month ahead and the year ahead?
Well, I mean, just on the seasonals right now, the big trade the last few years on the seasonal has been gold earlier in the year. And I know gold's boring and beaten down right now, but that's been the best seasonal trade. That's been the way to start your year up 10% for the last couple years, even this year, which was a bit of a dog for gold. Or it seems that way since it's been so long since it's done anything. So that's probably the one to watch early in the year. And, you know, you had this US dollar strength into year end, which has been a thing for the last few years, and maybe that unwinds a little bit and the euro gets going. It'd be another spot I look at. And then just today, the Canadian dollar looks pretty good. That was a very strong retail sales report just came out a half hour ago with CPI a little on the high side, and maybe the Bank of Canada gets back in there and hikes again. And in January, they've certainly been keeping the market off balance. So there are a few spots where I'd be looking, but I think right now we're in this weird tax phase in the broader market. And then bonds. I think, you know, bonds are up at 250 almost in tens. That's a breakout. And anything.
Where's it project? Like 305 or so, Adam? If you just take, you know, 265 was the high before the recent pullback to 2. So I think it takes us well over 3, doesn't it? This breakout in yields.
I mean, and you thought, you know, Bill Gross was talking about a huge downtrend since the 80s is starting to come under pressure, and you know, you probably want to draw that with a bit of a thick pencil, but it's yeah, if you get up and it gets going and inflation ticks higher, I mean 3, I think you can get a real squeeze on the bond market up to 3.5 if people start to get nervous, and Powell steps in and does something hawkish off the start, then you price in a hawkish Fed, and you know, you get a huge squeeze in bonds, and the yen crosses dollar yen. I mean, 125, 126, 130 at some point next year would be in the cards if the bond breakout is real. But what do you say anytime there's a market moving in really the last few trading days of the year? You've got to be a little bit skeptical.
Yeah, I'm interested in what your thoughts are. I had a conversation with Larry Pesavento yesterday, and he asked me, his first question was, Dale, what's with the dollar? It's not reacting to a weak bond market, higher yields. And I said, yeah, correlations are great till they stop. Do you think there's going to be a continued disintermediation between them, or maybe a reversion to the mean here?
Yeah, I think it will come back together. I think right now the euro is getting the benefit. That euro yen trade looks like it could go, and I think it's just passing through. That carry trade is more built into that. More possible to unwind in that, because you had bond yields so low, and they're up to 42 basis points from 30, you know, 3 days ago, and you know, I think at some point you look at the year ahead and you say, okay, I don't know when Draghi is going to change gears, and he certainly doesn't seem to want to help the euro out, but he inevitably has to, and it's just this waiting game of saying, okay, whatever, I can wait it out. I can wait it out down to 114 or even 110 in Eurodollar, or something similar in euro yen. But eventually, Draghi's on my side, and this thing's got to go higher. And I think that's probably one. You
think it's pretty unusual? I do that. We have record net long positions by specs in the euro for, I don't know, weeks now, and you know, everyone's trying to fade euro strength. And to me, it feels like all we do is we get these little pauses, and that it's kind of a short squeeze on in there. Does it feel that idea?
Well, it's funny. That number is scary. It doesn't seem like the market is that in love with the euro, and it is. Just last week, I think, hit the all-time high on the CFD positioning. Yeah. You know, but the squeezes, they seem weaker at the moment, and I mean, there's just no, where's the enthusiasm for the dollar going to come from? You know, the tax cut now, you know, unless you say it's not priced in, but I think we'll find out in the next couple weeks whether it is or not, and then the kind of coast clears for those euro longs on that end, and then I mean, sterling looks ugly, but you know, what else can you do but buy where things are getting better? And you know, that's I think it sets up really nicely, even though it should be a bit of a worry that those squeezes are there. But you know, you've seen people over and over say, okay, let's wait for a retracement back to whatever, and it's kind of petered out at 115, and it's doing all right here right now. It's a pretty good looking chart right there.
Yeah, it is. I mean, over yesterday's high, it looks like, you know, 120 is a layup. So 121.5 potential. So maybe that's what you were saying, is that this rebound in the dollar into year end unwinds in January, like a lot of things are unwind. And right now we're just in limbo land until everyone gets back from the holidays and volume comes back.
Yeah, I feel it. And but you know, you got to trade what's happening right now. But even right now, I mean, it looks okay. There's a bit of a wedge there. Dollar yen is kind of into a bit of a wedge as well. And there's just not a lot of data left to come. So
how about the crude, Adam? You know, we've had a great recovery this year in crude, and I had a target of about 62 a long time ago because it was the top of a falling wedge. you have anything seasonally in energy? Maybe the weak dollar could be the push to get crude to break out to new highs, maybe up towards the 62 area. And I'm getting that you're very bullish yen. You were last time you were on as well. So
I'm more bullish on the yen process, but I think for oil, we're in now this really the September through December period is negative on the seasonals and very negative, and it's been and it's rallied anyway, and you know, to me that is a pretty impressive sign from oil. I mean, we had OPEC come out and didn't really do anything that bullish, and it pulled back, and now you have crude coming up some of the best levels of the year to finish out the calendar year, and then you get into January, February, which is a better seasonal time for oil through the first quarter, and you know it's tough not to like it, and there isn't that much talk about it. Again, you have that little bit of a wedge pattern up here in the last bit, which is probably typical going into year end, but if we get up over 60 and some of the supply worries start to ease, then there's a lot of potential on the upside.
You know, I had a question from the community, and you know, part of this tax package was repatriation of funds held overseas. Do you think that, you know, I know sometimes we get an effect in the yen near fiscal year end and repatriation in the yen. This might be the first time in a while we've had repatriation of corporate funds back to the U.S. Any effect from that?
Yeah, it's tough to say. I mean, in general, I guess you're bringing it back to the U.S., you guarantee it's in U.S. dollar, but how much of that is held in U.S. dollars offshore as it is? But I think on the margin, it is a dollar positive, but what's the timeline as well? I mean, are you in that big of a rush to get it in on January 1st or whenever it goes into effect, or do you say, okay, well, let's find something to do with this and we'll move it over? I mean, the tax code, it's not like a one-time sort of window where you could tee it up, but it's definitely, I think that it plays into that dollar yen, which could end up being a pretty good story next year, or all the yen crosses, because they're looking pretty good, just on the bond story, the repatriation story, the growth story, everything.
Yeah, so we've had heartbeats in Aussie and Kiwi in the last few weeks. Bear market rally or continuation move, and I think it's taken a lot of people by surprise. We held that major trend line at 75 in the Aussie, and we've had a nice rally. It doesn't seem to want to give up much of the rally. Wonder if you have some seasonals in Aussie or Kiwi for next month.
Yeah, I guess really into the second quarter when you see the commodity currencies get that seasonal lift, so it's a little ways off yet. There isn't too much to start the year, but you know, this is kind of impressive that we dipped down below pretty solid support at the June, November lows. Kind of like the euro on that head and shoulders, where it looked like there was this head and shoulders going to roll over, went down, and then you know, right back up. And even the last few days, it's been holding near the top of the range. I mean, that looks pretty good. Right now, you hear the talk about the RBA and interest rates, and it's very subdued. And you know, they're a little bit worried about housing in Australia, and there are some definite things to worry about there. But one story that didn't get much attention was China this week. They outlined some of their economic priorities, and they removed the part about debt reduction. And you know, the thinking is that China might turn on the taps a little bit next year. They're still going to keep it tight on housing, but some of the commodity prices, and that could get another real surprise lift in 2018. And of course, that's naturally great news for the Australian dollar.
And we're talking about gold. January is a great month for gold, and you know, I kind of correlate Aussie with gold. At times, they really correlate tightly. So maybe that's part of the story, is that gold bounces, Aussie bounces next month. And
just looking at the bigger picture, it's just a series of higher lows in Aussie over the last 2 years. So how much downside is there really before the Australian dollar? And maybe you pull up the yen cross, might even look a bit better.
Yeah, the Aussie Yen has been acting real good. Yeah. Okay.
That's a nice bounce here in the last little.
Yeah, and Euro Yen broke out, trying to break out. So Yen crosses seem to be where your conviction level is the highest going into next year.
Yeah, I mean, I'm really interested in the bond story right now and the inflation story. I mean, the synchronized global growth story is the story, and if that, we don't need to overcomplicate it. If that's what's happening, it's still early days of it, and the yen crosses can really go, because you might have every central bank in the world either getting more hawkish or raising rates next year, except the Bank of Japan. And so, I mean, it's simple enough. That's where the growth is. That's where the money is going to go. And yeah, it could be a very good year for those yen crosses, for the carry trade, for global growth. That's where we get with all-time high.
Well, Adam, hanging out with you, I get an all-time high. So I want to thank you for all your contributions to our community all year round, Adam. Really appreciate how you come in every time. You pinch hit for me. You're like my designated hitter for me. And you've stepped up many times when I've needed someone to fill in. And it's not like you're a sub. You'd be in my you're in my starting lineup too. And really want to thank you for, what you've done. Every time you come here, you give me clarity, and I have nothing but, I'm rooting for you. I'm in your corner, and I hope that you have a great 2018 in all ways, not just financially, for you and your family.
No, it's been a great year this year, and I mean, this Bitcoin mania is really something. I mean, that's that Long Island iced tea chart. It's just a snapshot. They're trading $15 on the blockchain switch. Like, I'm just so fascinated by this story. I think it's such an interesting time to be alive, just to be able to watch it, and the mania just.
That's all I'm doing is watching it. Are you trading it or owning it, or are you doing anything in there?
I mean, I mean, we've been writing about it for 5 years and talking about it, but I think to jump in at this point, like, I'm just enjoying it. There's other ways to make money, but God bless anyone who happens to own a company that puts blockchain in its name tomorrow, because you're gonna have a heck of a day. So
how about Forex Live Crypto?
Yeah, exactly. I mean, we got to do the IPO first.
Have a great holiday, buddy. Thank you so much, Adam.
Hey, Dale, always a pleasure. Thanks so much for having me. Have a Merry Christmas, and to all the community there, good luck in 2018. It's going to be a fun one for sure. So take care.
Yeah, and you can follow Adam at FX_button or at Forex Live, and him and Greg do a great job keeping people in tune 24/6 with all breaking news and how to go about trading it. And Adam's one of the best in the business, in my humble opinion. So thank you, buddy.
Right back at you, Dale. Have a great New Year and enjoy the break. If you get one.
Adam Button, everybody. All right, Face. We'll wrap it up tomorrow. And thank you, everyone from investing.com, for hanging out with us. Hope you enjoyed it. Hope you have some ideas, some things to do on a look ahead. And remember, most of all, don't just count your pips, count your blessings. Adios.